Hello investors! Welcome to the channel where I talk about investing for the long term through investing in companies that pay a dividend. This is known as dividend growth investing. My name is Michael, and today we're going to start off with how the market ended for the week and then look at stock futures. Just taking a quick look at the major indices for the week. For the S&P 500 index, it is down 8.79%. For the Nasdaq index, it is down 8.17%. And lastly, for the Dow Jones index, it is down 10.36%. The markets are experiencing a lot of volatility this week and overall trended downward for the entire week. In fact, we have experienced one of the most downtrending market fluctuations of all time. Just looking over here, just from a point loss standard basis at the S&P 500 index, we had the 5th largest point percentage loss this past week on the 12th. There was a net change of 260 points, which is a change of about 9.51% in the S&P 500 index. For the Dow Jones index, the top 4 losses happened this past week and in the beginning of this year. The first 4 spots of the biggest change in the Dow Jones Industrial Index happened this past year. Reading from the top, this past week, we lost 10% in the Dow Jones Industrial Average. We lost 7.79% on March 9th in the Dow Jones Industrial Average. And lastly, we lost 5.86% on March 11th for the Dow Jones Industrial Average. These are huge losses in the market. In fact, if we look at the indices going backwards, for the S&P 500 index, it recently closed at about 2480. Looking backwards, 2480 was somewhere in July of 2017. Same thing with the Nasdaq. If we look at the past closing at 7,200, the last time it was around 7,200 was around 2019, and again around 2018. For the Dow Jones, if we look at the last closing at 21,000, the last time it was at 21,000 was near the crash at the end of 2019. And again, for 21,000, that was somewhere in middle of 2017. So essentially, basically what we experienced this past week is we have gone back in time to 2 years. 2 years of gains have been lost in just 1 week. Think about that. 2 years of gains have been lost in just 1 week. Now for some people, that might be very scary. But for people who invest for the long term, like me, we are super excited about this. Think about it. We are back to where the stock market was back in the middle of 2017. And it is now 2020. This means we have a huge buying opportunity. For those of you who have yet to get started on your financial journey into the stock market, right now is the best time to do that. Right now is the best time to learn about stocks, to get involved with investing, and start building your future. Taking a look at this article right here, the Dow Jones Industrial Average 11-year bull run has ended. That means for over 10 years, the index that follows blue chip stocks has stopped increasing in value over time and has now dropped over 20% in value. Now, this doesn't mean necessarily that the companies within the Dow Jones Industrial Average are bad companies. It just means that we're undergoing a difficult time and people are being fearful. And when people become fearful, they usually start selling out of the market, even though companies are fundamentally doing well. This is the time when we as investors take the opportunity of when others are fearful to buy more into the market, because now we can get amazing companies at affordable prices, even at cheaper prices than what they should be, and make great capital gain through inexpensive purchases. Moving over to give us a real visualization of the stock market, just looking at this heat map right here over the past week, pretty much everything right here in the S&P 500 index is down. And that's just from 1 week. Looking at the 1 year performance, if we take a look at how each of the companies are doing, again, a majority of the companies that are in the S&P 500 index are down for the most part. There are some here that are still in the green, but we'll have to wait and see if they come down to more affordable price levels. And fundamentally, the majorities of these companies are fine from a balance sheet standpoint. Companies like Amazon, Microsoft, Apple, Visa, MasterCard, these are great, wonderful companies that are doing really well. It's just that we are experiencing market volatility due to the virus that is sweeping the entire world. And when this virus, something that is new and unpredictable, enters into the stock market, it causes a lot of fear for people because of the unknown. And so people begin to sell out to try to preserve whatever they can. And for dividend investors like me, this is a great buying opportunity. And investors who only invest through a broad market index, they may be more likely to sell out of that index because overall the market is tanking downward. They don't see the potential in certain companies to do well into the future. And so if you're investing in a broad market index and you see the value of your portfolio going downward, perhaps you should either $1 cost average into those ETFs, or 2, start analyzing companies and seeing which ones are the diamonds in the roughs and choose those companies and create a portfolio around those companies and buy them at great prices, such as right now. So now, since we know that we are in a bear market territory where the stock market has fallen more than 20%, let's take a look at how my portfolio is doing. So, a lot of red here. Looking at the past year, my portfolio is down 40.54%, causing a loss of about $17.50. Looking at the past quarter, my portfolio is down 28.92%, causing a loss of about $22.90. Looking at the past month, my portfolio is down 24.22%, causing a loss of about $24.60. Looking at the past week, my portfolio is down 13.56%, causing a loss of about $12.70. And finally, looking at the past day, my portfolio is actually up 8.85%, causing a gain of about $6.50. So wow, that is a lot of market volatility for just 1 week and a lot of red to still take on. However, I am still confident that this portfolio will rebound as soon as the health crisis has been handled throughout the world. And again, just like in the last episode, I'm paying more attention to this number right here, the earned dividends. If we look at the all-time charts in this portfolio, it has earned a decent amount of cash flow, a little bit over $170. Even if we go down to smaller and smaller increments in time periods, we can see that the overall amount is increasing at an exponential rate. So I'm pretty happy to see that my portfolio is still providing me income even though the market is down overall. So this is why dividend investing is so important, is that even on days where you see your portfolio is going down lower and lower in terms of value, you know that you are still making income through your investments. And this is something that is extremely passive, something that you don't have to really work for besides pressing the buy button to purchase more shares of a stock. And the earned dividends number is the reason for investing in this kind of portfolio, because even in market downturns, this number will continue to go up regardless of what happens, and the only reason this number would ever stop moving upward is if all the companies I invest in suddenly stop paying dividends. Now, let's take a look at the earned dividends that I have earned this past week. This past week so far, I've earned a significant amount of dividends from holding these companies. For example, I earned 1 cent from Nordstrom Corporation, 16 cents from Target, 15 cents from United Parcel Services, 5 cents from United Technologies Corporation, another 5 cents from S&P Global, 2 cents from Centerpoint Energy, 27 cents from Microsoft, 4 cents from PPG Industries, $1.48 from 3M, 99 cents from Walgreens, 5 cents from Avista Corporation, 1 cent from Corvetta, 6 cents from Dow Incorporation, 10 cents from Mainstream Capital, 8 cents from Navaris, 35 cents from Realty Income Corporation, 4 cents from Sherwin-Williams Company, 21 cents from Stellus Capital Investment Corporation, and 15 cents from Sipton Company. These are dividends that I earned as a result of me owning shares of each company. This is money that I did not have to put any effort into earning besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep, and this is referred to passive income. Earning which are derived from an enterprise like a rental property or company which require little to no effort to earn and maintain. Although these amounts may seem small, every little bit helps and eventually will snowball into something bigger through compounded interest. So that's pretty much all I wanted to talk about this week. If you're still investing into the stock market, then just hold on. It will get better. Maybe not in the next coming weeks or the next coming months or even a year from now. But overall, the market still, in general, goes up over time. It's just that right now we're experiencing a lot of market volatility, and this is probably the greatest time for everybody to get into investing, to buy stocks at really cheap prices, so that in the long run, a couple years from now, your overall portfolio will increase in value. And that's pretty much all I had to say. Thank you so much for watching this video until the end. If you like the video, then please give it a thumbs up, as it will help the channel grow immensely. If you have any comments or questions, then leave them down below in the video, and I'll do my best to personally address it, either in the comments or answer it in future videos. Thank you so much. I greatly appreciate everyone watching my videos, and I hope to speak to you all again very soon.